Hi, this is Zak Mir with US Chartbreakers here at Zak's Traders Cafe for Tuesday, the 7th of May. Starting off with the S&P, which is nestled right above the rising 50-day line, the blue line there, and obviously well above the floor of that rising trend channel from back in October around the 50.75 level. The view at this stage is that while there's no end-of-day close back below that price channel floor, we're looking for at least a retest of the best levels of the year to date through 52.80. Best case would be up to 54.80, which is the top of that rising trend channel by the end of next month, although obviously at the moment that seems a little ambitious. Any dips towards that 50-day line currently around 51.30 regarded as buying opportunities. Moving on to the Nasdaq 100 that is, and here position is that we're looking for basically further upside after the break of the 50-day line, which is now rising around 17,900. At end of day close above 18,100 should be enough to get this market back towards the highs, which were really from the turn of the month, March, April, around 18,400. For next month, we're looking for as high as 19,300 and the top of that rising trend channel from September, October. On the downside, maybe the risk is to fill the gap down to 17,500, but at the moment looks as though we've escaped that grisly fate. Moving on to the stocks and starting off with BioCryst Pharmaceuticals. Here we've gapped through the 50-day line, holding at recent March resistance. Big barrier here between $5.80 and $6 through that zone. Then we're looking for 750. Perhaps as soon as the end of this month. But the key here is staying above that 50-day line, currently at $5. Next up is Exela, and here we've got a situation where the market is looking better than it has done for quite a while. The reason for saying that is the way that we pushed through a rising 50-day line and looking for the initial resistance to come in at around $3 above that. Looking for the top of that rising trend channel base from September, as high as $4.80 by the end of next month. But holding that 50-day line around $2.30, the key for that situation. We looked at the next stock very recently, Fittel Corporation, and here the reason for the optimism is that we're making good progress within that rising trend channel from October. Top of the channel there around $11.15, which hopefully will hit later this month, especially while we remain above the 50-day moving average, $7.10. If you're looking for maybe a better stop loss point, that would be around the $8 mark, which was resistance on the way down. An old favorite is returning next, and here it comes in the form of Marathon Digital. Here you can see that shares have started to regroup. They've broken a resistance line there from back in March. That was roughly around the $18.80 level. And we're nestled on the 50-day line around $20.10. Above that, looking for at least a retest of March resistance at $24, perhaps by the end of this month. But the key here is probably staying on the right side of the $20 mark. On to a less familiar name, Manitex International. And here we've broken that resistance line there from December. That was around $6.80 above that on an end-of-day close basis, looking for the top of that rising trend channel from the end of October, as high as $10.20, perhaps by the end of next month, or hopefully a bit sooner than that, given the way that the 50-day line is rising. And the start of this rally was a bear trap gap reversal, so we bear trap below the April support and bounced pretty sharply. Another stock which we covered very recently, and this is perhaps one of our favorites at the moment, is NFT. Here you can see that the shares have managed to get back to the 50-day moving average area. They also closed that gap down from $7.30, above $7.30, looking for up to $14 by the end of next month, or even sooner, given the way that this stock can spike quite well when it wants to. The ideal scenario would be that we hit $14 plus by the end of this month. Another less familiar name, NRX Pharmaceuticals, and here a double gap down for the stock, but seems to be bouncing back above the old February support there around $2.80. The longer we can stay above that, the greater the chance of a move, at least to the 50-day moving average, $4.40 later this month. But the key here is that it is a bear trap and also a gap close of the gap down that we had at the end of last month. A esoteric choice next, perhaps, in the form of Perficient, and here probably early days in terms of a potential turnaround, but we have broken a falling wedge at $46.80. Above that, looking for the now rising 50-day moving average at $55, perhaps as soon as the end of this month. Good bullish divergence there with a lower low for the end of April, higher RSI trace, so that suggests that some momentum is in place there. We have looked at Ride quite recently as well. And here it looks like we've got a rising trend channel base. We managed to bear trap back above the old support there from March around $3.60. The longer we stay above the recent April resistance of $4.90, the greater the chance of a move to retest the March resistance towards $8, hopefully sometime later this month. Another potential winner coming up, Strong Global Entertainment, and here you can see that we've gapped up after gapping down back at the end of January. So it's a bear trap island reversal. That's definition is that we bear trap down to new lows and then gap up, and that tends to be a very strong signal. The current situation is that we're looking for at least a retest of that resistance line there from back in August last year, the top of the broadening triangle base that we've got in place since last summer. And that we should get that while we're on the right side of $2, given that $2 was the late 2023 resistance on the way down. Moving along to the last three, and the first one again that we've looked at quite recently, which is Upland Software. Here, stalling near the March-April resistance around or just above the $3 level. The longer we can stay above at least the 50-day line at $2.60, the greater the chance of filling that gap up to $4.40 by the end of this month. Best case would be obviously to hit the top of that broadening triangle from April last year as high as $5.50, perhaps by the end of this month. Last two coming up. First one is Vroom, and here we got rising trend channel base after obviously a rather painful decline for the shares since last summer. The current position is that we are above the rising 50-day line, around $12, and the longer we stay above that, the greater the chance of a move to $23 maybe by the end of next month, which I suppose would also be towards the bottom end of that January gap down that we had, rather vicious one, early at the start of this year. Finishing off with XBP, and here a situation where we're looking for a recovery, given the way that the shares have already managed to gap higher. The gap situation coming at the end of last week, and the top of that broadening triangle there from January heading for $5.20 plus. We're looking for that while we remain above recent resistance around $2.30, maybe tighten that up to $2.50 near the bottom of the gap that we've had. But the key is that we've got the 50-day line rising and we stay above the pre-gap resistance. That's it for me today. More updates tomorrow.